the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares dipped earlier today, tracking movements in Asia. So if you look at the Straits Times Index, it was down 0.11% at 4,435 points at about 2:07 p.m. Singapore time, and that's with a value turnover of some 812 million Sing dollars seen in the broader market. Now, off to the closing numbers, the STI closed in the red as well, down 0.3% at 4,427 points. Now, in terms of value turnover, that's 1.4 billion Sing dollars. Gainers trailed losers 250 versus 371. Top advances for today we've got for you Holpa, Propnex and Venture Core, and top decliners we've got here Jardine Cycle and Carriage, New Incorporation USD and ST Engineering. Now, in terms of counters to watch, we do have Seatrium, and we'll tell you why in just a bit. But elsewhere, from what a Middle East ceasefire and a US government shutdown mean for investors to shares of Malaysian glovemaker Top Glove surging after posting its first full-year profit. We've got more international and corporate headlines in focus. And joining me on the line today is Tu Junjong, dealing manager from Mumu Singapore. Junjong, welcome to the show.
Hello, Tintin. Thanks for having me.
Great to have you. And Junjong, let's start with global markets this time around. A Middle East ceasefire and ongoing US shutdown, they're weighing on investors right now. And how has that played out then in US stock markets overnight and in Asia today?
The US S&P fell about 0.28% yesterday. However, the US market has still been going higher, with October having 0.7% up and September with more than 3.5% gain. So the ceasefire hopes have certainly softened safe haven demand, reducing a lot of pressures on gold and treasury bonds, while the ongoing shutdown still continued to increase policy risk. Overall, the equity market as a whole has been on the new highs in the US, and over in Asia, similar trends as well. Singapore STI, Japan's Nikkei 225, Korea's KOSPI are all showing new highs this month. The US dollar is also gaining strength. For Singapore investors, the USD SGD is about 1.29 now. So it looks good for investors investing in the US market. However, one thing to note that such firm dollars will also have additional headwinds on equity prices.
Okay. I do want to zoom in on the U.S. government shutdown, Junjong, because the U.S. Securities and Exchange Commission has offered some relief to would-be public companies stuck in a limbo and as the government shutdown drags on. So under guidance released by the SEC, companies launching IPOs, while most of the government is closed, they will not have to include a specific price in their documents filed with the regulator. How far is this a reprieve for companies, and what does it mean for investors?
So with the shutdown ongoing, the policy risk, and it's inevitable that such IPO listings will be affected. And these changes actually will reduce the amount of information required by companies to the SEC. So, of course, the core part of this relief is that now issuers can rely on this Rule 430A in the IPO process, where they can actually file their registration statements without having the fixed single offering price in the initial documents. And instead, they can actually include a range or even defer the pricing to a later date. So this is important, especially in sectors where timing is essential for their listing. And this is a huge relief for companies looking to IPO because they do not have to suspend their plans because of the right now the lack of staff at SEC, for example. But that being said, the risk still remains for companies as they still have to meet your disclosure requirements. And of course, the eventual pricing must still be justifiable. They can't just make up a pricing. So when the SEC staff do return, there could be additional modifications or rejections or any other kind of queries that can impact their listings. However, for investors, on the other hand, it brings about uncertainty of pricing and valuations for them when they want to invest in these IPOs, which are two of the most important aspects for them. Yes, there is more possible IPOs despite the shutdown. It can mean more opportunities for investors, but these opportunities may come at a cost for investors, and now investors must really read carefully and fully understand the pricing structure as well as the final prospectus really before making their decision.
I see. And going back to the Singapore stock market, as usual, Jun Cheong, how did the STI fare today, and any surprises if we look at the biggest movers?
So the Singapore Straits Times Index did sell from the highs we've seen on Tuesdays, and it closed about 0.3% today. Of course, for the STI, Seatrium is one of the top losers for the day. However, on the winner side, I just want to talk about Singtel, which has emerged as one of the top performers. And this is despite the recent Optus outage in Australia, which has been raised by both Australian PM Albanese as well as Singapore PM Mr. Lawrence Wong. Singtel has actually steadily climbed back up from the recent lows from the aftermath of the, of course, unfortunate deadly incident. And with global uncertainty still going on, we're still seeing market rotations towards the defensive sector. Of course, evidently, we see this from Singtel's share price movements, as well as another thing is the consolidation of the different telcos in Singapore in the recent months. For the Singapore markets, of course, the interest rate sensitive sectors like your S-REITs and banks, they will continue to be of interest to local investors, especially as the U.S. government shutdowns continues.
Now, zooming in on some of the counters to watch, we do have Seatrium as well. We said that we will share more, and here's the development. Well, Seatrium received a notice of termination for a contract secured back in 2022 by its subsidiary Sembcorp Marine Rigs and Floaters, which is now known as Seatrium Energy International. Now, this appears to be a rather significant piece of news for the firm looking at its share price movements today. Any thoughts on the news?
Significant news for Seatrium, definitely. We did see the share price fell over 7% on the trading session and making it one of the biggest losers in STI for today. So, of course, the Mayor's offshore wind did send out the notice, and the termination is actually US $475 million contract. And the problem right now is this has actually already been about 98.9% completed. Seatrium is definitely evaluating their legal and commercial options. And right now, for investors, they have to wait and see the results of this contest by Seatrium. Seatrium did mention that they will make announcements when there are material developments and advise shareholders to exercise caution when dealing with their shares. Of course, a lot of analysts has been flagging out that while the termination is serious, negative, in the near term, definitely, much really depends on whether Seatrium can recover costs or enforce a lot of the others' contract terms. Personally, definitely this is a huge setback for Seatrium in the near term, especially since it's nearly completed. But if Seatrium could recover a significant portion of its costs plus the damages, I would say the downside may be mitigated. Else there can be further risk involved, especially if other projects face terminations as well. I think this kind of shock is frequently overplayed in the immediate term, where markets tend to assume worst case. So if Seatrium provides clarity or secures favorable settlement, some recovery is possible in the terms in the share price terms.
And if you're just tuning in, we're now in conversation with Tu Jun Cheong, dealing manager from Mumu, Singapore. Well, Jun Cheong, another counter to watch for today. Quite interesting, this one, Top Glove. Now, shares of the Malaysian glovemaker soared some 7.3% earlier after posting its first full-year profit since 2022. I believe this comes on the back of increased demand for gloves since that slump we saw post-pandemic. What do you make of the latest results, and how far are investors' reactions today justified, in your opinion?
Definitely. So, of course, Top Glove is... for Singapore markets, one of the most talked about stocks during the pandemic.
Yeah.
And glad that it has made headlines again. So for Top Glove, of course, they did report that they have swung fully into a full-year profitability after, several years of losses following stuff like cost pressures, of course, weakening demand since it's post-pandemic, and of course, there's an oversupply in gloves. So the turnaround definitely did come as a raw material cost for Top Glove, your rubber, your nitrile, your other chemical stuff, they started to moderate. And as a global glove demand improves in, of course, certain geographies. So for Top Glove itself, this definitely signals that the product and demand environment is stabilizing for them. And their reversion to profitability gives validation to their cost cutting, to their efficiency, and their rationalization effort. Investors, on the other hand, should still note that 1 year of profit, of course, doesn't mean it's a guaranteed a multi-year recovery. And it will be a test for shareholders to see if Top Glove can really sustain these results for, of course, many quarters to come. For investors, they should take notice of, definitely take notice of the input cost, which is one of the highest costs for Top Glove, as volatility in the prices of your rubber or your chemical feedstock could really start to erode margins for the company again.
Now, across the region, Jun Cheong, this one, the Stock Exchange of Thailand's president said the exchange is considering easing some of its rules to boost market liquidity next year and expects the recent stock rally to encourage more IPOs. What's your take on that? And what would this mean for our local boss, the SGX, as it seeks to rejuvenate the local equity market here in Singapore?
So I would say competition is always good. It does force us to do better. So should Thailand's stock exchange become more aggressive in their reforms, be it faster listing, lower friction, or maybe increase in incentive structures, the local SGX will certainly feel some pressure. Of course, for 2024 last year, Malaysia, Thailand, and Indonesia collectively raised more than 90% of the IPO across Southeast Asia, and Singapore was never part of the conversation. So right now, in Singapore, we do have the $5 billion equity market development program, the EQDP. They definitely have more work to do, especially as pressure from Thailand comes in. On the trading side, of course, one of the changes that Thailand is looking to enhance will be the so-called uptick in rule for short selling. Many usage for short selling, but we have seen many exchanges putting some form of restrictions on short selling in a bid to boost the market, such as the ones that we have seen in South Korea. But strategically, I believe that Singapore and SGX still have many strong points, such as our regulatory reputation, the good connectivity to the exchange, and of course, really a huge institutional base for financial markets.
And, Jun Cheong, before I let you go, we've started this conversation by looking at the US, so let's end off looking at China instead. China has tightened its grip on rare earths, extending export controls beyond its borders for the first time to cover this foreign transfers of products made with Chinese rare earth materials or technologies. What does the move mean for investors ahead of this possible meeting between Trump and Xi in South Korea later this month?
I would say it's a really strategic move. Of course, with the meeting between President Trump and President Xi being expected on the sidelines later this month, I believe that China is reinforcing its strategic hands in any form of negotiation they will have with U.S. Because these controls that they are currently putting on will give them additional bargaining power. So just for context, China already dominates the rare earth mining and processing capacity globally. So by extending these export controls to products and technologies made with Chinese rare earth, Beijing is essentially exercising deeper leverage over global supply chains. For investors, on the other hand, this raises heightened supply chain risk in critical sectors like your EVs, your semicons, your defense systems, and even those in advanced manufacturing. So companies with exposures to Chinese source materials or processing may now face your trade constraints, your regulatory constraints, or even licensing constraints. So I guess in short, resource security is becoming the central in a lot of this geopolitical strategy, and investors can reaccess their exposure and favors producers with diversified supply chains.
I see. Lots to watch indeed. And thanks so much for the conversation today, Jun Cheong. That was Jun Cheong, Dealing Manager from Moomoo Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.